Today, I want to share a dirty little secret with you. It's about the tax preparation industry, and it's something that could directly impact your private personal information. Last year, I met Sarah, a single mother. She handed over her tax documents to a tax company she thought she could trust. She gets her tax return prepared, everything seems fine, but a few months later, she discovers that her identity had been stolen. This may or may not have been the reason, but she did some digging and she found out that her personal information was actually sent overseas to a foreign country by her tax preparer company for someone else to prepare. Although she can't prove it, she strongly feels that her private information had been compromised through the tax prep company who hired an overseas firm to prepare her taxes, and she says this was all without her knowledge. Yes, that's right. Many US companies right now, possibly even your tax preparer, are offshoring their work to countries like India and the Philippines. And while there's nothing inherently illegal about these business practices, they actually need your consent to do this. But, and this is a big but, it's often buried in a pile of paperwork that most of us never read thoroughly. Today we're diving deep into what this means for you, how you can protect yourself, and why it's such a big deal. Let's dive in. Hi, my name is Noel Lorenzana. I do taxes, and I absolutely do not and will not offshore my tax clients' tax returns just to save a few bucks. I get pitched all the time by companies in other countries offering to do my clients' tax returns for pennies on the dollar. I imagine that it could be tempting for some, but not for me. First, we need to talk about the so-called accountant shortage. We often hear that there aren't enough accountants in the US to meet demand. It's true that fewer students are choosing accounting as a career choice, and there's a real need for skilled professionals. But let's dig a little deeper. Consider this. Businesses often view accountants primarily as a cost center. When it's time to cut expenses, labor costs are usually the first to go under the microscope. And here's where it gets interesting. While accounting demands precision and expertise, the reality is that in the US, accountants often aren't paid in line with the high stakes and complexity of their work. People often don't understand the hard work that's done in preparing a complete and accurate tax return. If there's a large refund, great job. If there's a large tax due, you think they must have done something wrong. It's not just about crunching numbers. It's also about safeguarding financial integrity. And yet, many skilled American accountants find themselves undervalued. Instead of increasing salaries to attract more talent, some companies opt for a cheaper solution, and that is offshoring. Offshoring means outsourcing work to workers in other countries where labor costs are significantly cheaper. With advances in technology, a company in, say, New York can easily hire a tax preparer from the Philippines or Bangladesh at a fraction of the cost. From their perspective, it makes economic sense. Why pay an accountant in the States $100,000 a year when you can maybe get the same work done for $20,000 overseas? Personally, I've heard the quality of work from offshoring is lacking, so I guess it's true what they say, you get what you pay for. But here's what often gets overlooked. Your sensitive financial data is now being handled in a foreign country, potentially subject to different privacy standards, different regulations, and not to mention different ethical standards. This practice is legal, but it requires your explicit consent. That's where IRS Form 7216 comes into play. It's a required form that you probably signed without fully understanding its implications. This form is crucial because it allows your tax company or preparer to send your information overseas. Let's be real though, when your tax pro, or any professional for that matter, has you sign stuff, most of us just skim through these documents, not fully understanding what we're agreeing to. In this case, we're agreeing to have our personal private financial information leave the country for God knows who to have access to. The consent disclosure usually looks like just another standard form, maybe something like this. Mandatory Internal Revenue Code 7216 disclosure and consent. Federal law requires you to obtain client consent to disclose tax return information to third parties for purposes of assembling information, calculations, and processing of various IRS forms. It really sounds harmless, doesn't it? I mean, there's no mention of sending your personal information to a third world country, but if you sign this, you're allowing your tax information to be prepared overseas, and most people don't even realize they've agreed to it. Do you find this disturbing, or is it just me? Let me know in the comments. Now, it's very important to know how to keep your taxes prepared strictly in the United States. That is, if that's your preference. I think it is, and with that being said, here are some steps you can take to protect your private personal financial information. Number 1, ask directly. Begin by asking your tax preparer or accounting firm outright, do you outsource any of your tax preparation work overseas? You might be surprised by what you find out. Number 2, check your paperwork. Before signing anything, especially around tax season, scrutinize the paperwork for any mention of IRS Form 7216. Understand what you're agreeing to before you give your consent. Number 3, choose local. If you're uncomfortable with your data potentially crossing borders, choose a CPA or tax professional who ensures all work is done in-house, in-state, and in the United States. Not all firms outsource their work, so it pays to shop around and ask to be sure. Number 4, read the fine print. Yes, I know it's tedious, but understanding what you're signing can prevent unwanted surprises. Taking this extra step can make a big difference in how your personal information is handled. While globalization has its benefits, the push for lower costs shouldn't undermine our local job market or compromise our personal data security. There's a point where we must ask, where do we draw the line? Shouldn't there be more regulations in place to help keep jobs here and ensure that our sensitive information remains secure and within our control? This isn't just about protecting jobs, it's about maintaining the integrity of our personal financial information. It's a topic worth looking into, especially as we consider the future of our economy and the employment landscape. Let me know what you think. Are you comfortable with your personal information being accessed by someone from a third world country? Let me know in the comments. Taxes and tax season are stressful enough without worrying about where your tax data ends up. By taking a few important steps, you can have more control over how and where your information is processed. On a related note, to safeguard your taxpayer information with the IRS, you probably should get an identity protection PIN number. Because, as you probably know, our personal information is out there due to a recent nationwide hack. You can learn more about that in my video. I'll link it up here. Thanks for watching, and I'll see you in another video.